Welcome back. I'm Jeremy Saffron. Well, gold is holding above $3,300 an ounce. Silver near 37, but the real story is where demand is coming from. In July, investors poured more than 60 tons into gold ETFs. It's the strongest inflow in 3 years, even as China's central bank paused its buying according to their official data. And at the same time, pressure on the Fed is intensifying. President Trump is demanding the resignation of Governor Lisa Cook while pushing for dovish appointments ahead of Jackson Hole, where, of course, Jerome Powell will deliver his most important speech of the year. And over in Europe, the ECB is warning that the gold market itself could be a systemic risk dominated by private clearinghouses with little oversight. Now, you layer on the highest U.S. tariffs since the 1930s, with even gold briefly in the crosshairs before the White House stepped back, and the stakes for the market have rarely been higher. Now, in moments like this, investors want clarity, and so do the companies building the next generation of mines. And few people know that balance better than Randy Smallwood. He's the CEO of Wheaton Precious Metals. It's a $40 billion streaming leader that just posted record results and one of the most outspoken voices in the precious metals world. Randy, good to see you. Welcome back.
Jeremy, always a pleasure. Thank you.
Now, we got to start on that macro theme here. I had you back on in June, and you mentioned gold is the ultimate comfort metal. And obviously, with President Trump now openly pushing for new Fed appointees who favor rate cuts and calling on Lisa Cook to resign, is this the moment where central banks risk kind of losing credibility and gold becomes the trust anchor?
Well, that's why I think we see so many central banks actually shifting towards gold, shifting out of U.S. Treasuries and into gold itself. And so I think it's just a growing momentum within the space to try and back away from the reliance on the U.S. dollar as the main reference currency, and gold is now climbing as a reference currency within the central banks. And so this trend is going to continue to grow.
Mm-hmm. And, you talk about the ECB data shows gold overtook the euro in 2024 as the second largest global reserve asset. I think it was 19 versus euro 16%. If central banks themselves are being politicized, does that mean private sector and ETF demand is now the real marginal driver of gold prices?
Well, no, because I think that politicized, what you're talking about is support for gold from policies within the United States. And so I do think that political activation is actually supporting gold prices itself. But as that moves on, there is, sometimes it doesn't look like it, but there's a lot of smart minds behind these central banks. A lot of thought goes into the decisions that they make, and just the overall trend worldwide from central banks and sovereign funds to shift into gold as a store of security. That has not lost momentum at all, and I think that's enough support to bring in the institutional and the retail investors themselves. I think that has been one of the leading factors. This real push in gold did start with central bank purchases out of the eastern part of this world, and it's really sort of gained momentum all the way through here now into what I would call the traditional West, so to speak. And so I don't see that momentum slowing down at all. If anything, I think it's just getting to be more of a worldwide phenomena. We're still a little bit light on the retail side. But I've seen lots of evidence that that's getting stronger and stronger.
Interesting. Okay, so on the equities on the miners itself, as opposed to kind of the ETF, the passive accounts, people are getting more into it?
There's no doubt. There's a bit more support for equities out there. We've seen that just by virtue of the number of financings that we've seen of late for the mid-tier and single asset development companies. And so there is definitely a bit more of a market that's building up now.
Yeah, U.S. tariffs are now effectively about 18.6%. It's the highest since the Depression era. But history tells us, usually tariffs drive costs higher and spark retaliation. But from your vantage points, do tariffs ultimately, help precious metals by fueling inflation and uncertainty, even if they raise costs for miners?
There's no doubt it's inflationary, and then you just can't argue with the math. It's simple math that any type of fees or taxes driving that local, driving towards deglobalization will drive costs up. To be honest, I think it's a positive on an overall basis, because I do think it makes a lot of countries and a lot of regions that are on the world sit back and look within themselves as to say, we need to be able to stand on our own 2 feet, and that's something that I do think is needed. For so long now, we've seen Europe not very supportive of the mining industry, but they're happy to consume all the products of the mining industry as long as it's mined somewhere else. We're starting to see a real trend with this deglobalization towards, maybe we need to find a way to produce that product ourselves, and seeing some broader support for the mining industry. So I think overall it's going to be a net positive, but it will drive up costs, and that's when I say it's a net positive for the mining industry and for the gold industry as a whole.
Right. Yeah. We've discussed the cost of capital before. It was almost unavailable, especially to some of the juniors. I'm curious, though. I mean, are you already seeing more miners turn to Wheaton for capital as debt markets tighten under these new tariff pressures?
Yeah, we have. I mean, and especially with some of the more recent streams out there that are getting to the point of pretty close to full project financing. Some of our more recent transactions have definitely attracted a lot of interest. And so, we definitely are seeing some attraction in space. The one area we're not seeing a lot is the big diversifieds, and unless they're heavily levered, they tend to have enough internal cash flow. So it's the mid-tier and the single asset development companies that we are seeing that increased demand. Most of what we're seeing is gold streams on gold mines, and maybe a silver stream in a gold mine, but that's where most of the investment is going into. I think what we do need is a bit stronger copper price. And if we ever start to see some movement in the copper space and some big copper investments, the one difference about the copper space is that mines are generally measured, the capital costs of those mines is generally measured in the $5 to $10 billion range versus the $1 to $2 billion range you see for your typical gold mine. That need for capital, we're quite excited about being prepared to help deliver that capital to build those copper mines when the market demands it.
Yeah, and it's certainly becoming a hot topic. I think even Trump's talking about copper mines right now. I'm going to get to Wheaton here in a second. I got to ask you about this story about the gold market kind of governance, because obviously, Randy, I mean, you were the former president of the World Gold Council. I just wanted to, yeah, you're right, chair, of course, the chair. I got to get your take on this story. It's kind of making waves in Europe. Bernhard Schnellman is a veteran of the refining industry, and he just wrote in the Financial Times that the gold market is too important to be left to private clubs. He was pointing to the LBMA and London clearinghouses, which dominate the global trade, but operates with very little accountability. Even the ECB warned that leverage and opacity and the concentration could make gold itself kind of a systemic risk here. Do you agree? I mean, is the governance of the gold market becoming a weak point in the system?
Well, in a sense, that's part of the attraction of gold, is that it is sort of abject of political influence and does sort of trade, I would say, more freely than a lot of other commodities around the world. That being said, the efforts that we've got underway to digitalize how you can own gold, and there are ways to digitally own gold now. You can buy an ETF; it's a share, and you've got a certain amount of liquidity with that. But there is a next step. The World Gold Council is working on that next step, and that is a digital gold token that is backed by physical gold stored in a vault somewhere, but is freely fungible, high level of trust, provenance behind it that links right back, so where the gold is that actually backs that. And we're not far off of that. The technology exists. It's a matter of working our way through a process that is accepted, and not only accepted, but embraced by the institutions around the world. And I do think that increase in liquidity, that increase in transparency, that increase will help reduce those risks. And there's no doubt the technology's there, so it's only a matter of time until we deliver this.
Yeah, it's interesting watching the digital gold front. Certainly a hot topic now. I mean, the argument is like if the BIS or another global body took over settlement governance, to your point, I mean, it's kind of gold is all about being private. I mean, would that help stabilize the market or make more regulation choke liquidity in the very market central banks rely on?
Well, and when we saw this, we saw that differentiation just in this last little tariff mistake that came up, where we saw immediately a huge differentiation between how gold was trading on the COMEX versus LBMA, and quite a spread that popped up immediately, right? And so I do think the market's got some capacity to manage risks like that and work its way through. That being said, those that jumped on that little mistake on tariffs, on the concept of the possibility of tariffs on gold, they probably paid a penalty. But the market did adapt to the information that was available at the time, and I do think that the systems are survivable, so to speak.
Yeah. Let's talk about that moment. I mean, was your phone going off? Obviously, earlier this summer, the White House briefly floated that idea. Donald Trump came out, no tariffs on gold. It spooked the market, obviously, until that personal correction. Did that moment concern you? I mean, what would it mean if gold itself became a political trade weapon?
Well, the beauty of gold is that it's worldwide, so it's really
Yeah.
tough for someone to actually control it to the point of where it is a political trade weapon. That's the attraction of gold, is that it's not subject to political influence. It can't be controlled by one politician, by one entity, one party. That's the huge attraction of gold. And
Mhm.
so, I don't see that as being an issue. The whole tariff issue, early on, very early on, I could see that it was just a what looked like an errant decision by a customs agent,
Mhm.
U.S. customs agent, who'd assigned a wrong account number to a potential gold shipment, and it blew up quite rapidly, and it just didn't fit with everything that you know that we in the industry knew about. I personally wasn't surprised when it got retracted and backed up. I think it was a small mistake at a junior level that blossomed up and got caught by the news agencies, and rightly so. It had to get corrected fast, and
Yeah.
and it did. So, that lack of political influence that makes gold so attractive. And
Yeah.
so I don't think one entity can control this.
Yeah. Well
It's not
said.
set up that way.
Well said. Okay, we got to talk about the growth strategy. I mean, you told me back in June that 4 new mines were Wheaton's kind of growth wedge. Since then, Blackwater has hit commercial production. Goose poured its first gold back in June. How much incremental production are you seeing? I mean, how does this shift Wheaton's 2025-26 cash flow profile?
Well, I mean, we're starting a good, sustained growth profile over the next 5-6 years. We're climbing towards 1 million gold equivalent ounces of production from our current guidance this year is about 600 to 670,000 gold equivalent ounces. And so, it's a dramatic increase. It's a 50% increase over the next 5-6 years. And so, these assets are coming on stream as expected. Blackwater is a very important asset for us, and Stephen Dean and the team of Artemis have done a fantastic job bringing that online. They're already accelerating in terms of expansion plans faster than what we have in our long-term schedule. So there's some upside in terms of how rapidly they're going to deliver the phase 2 of Blackwater. It's doing quite well. Goose, the team, it's not as much for us. We don't get as much gold from that asset, but the team at B2 doing a great job getting that up and running. And as you said, poured gold at the end of the second quarter. I think it was the very last day, so they really had to push hard to get it done. But they delivered on their promises, and as I understand, things are going very well up there. We've got Mineral Park coming on in September. We've got, of course, Platte Reef with Ivanhoe coming on towards the end of this year in the fourth quarter. And so, 4 exciting assets. Platte Reef, it's long-term upside. Again, they've updated the schedule in terms of the expansions, the schedule of expansions. We haven't even brought that into our guidance on a long-term basis yet. We will when we update next year.
Mhm.
And so, there's everything's just lining up nicely, and if not nicely, even better than what we expected. What's particularly exciting, I mean, next year we're going to see some good growth, but 2027 is going to be the real one. When Koné comes on in Cote d'Ivoire with Montage Gold, and Kermuk comes on with Allied, those two assets themselves will deliver a substantive bump in our growth and put us up well over 800,000 ounces of gold production by 2027. And
Wow.
so, pretty exciting times over the next few years as these assets come into fruition.
Yeah, I mean, it's been wild watching, obviously, some of the cash flow with the company, too. I mean, obviously, you've been asked this before already, but if gold consolidates around 3,300, which it is now, I mean, can these new ounces alone keep Wheaton on a record trajectory? You've been on a wild ride.
Yeah, it's. I mean, I don't think it's going to. I mean, I'm comfortable to see the consolidation at 3,300 because I think it's building up a firmer and firmer base.
Mhm.
But I don't think we're finished with respect to gold. I'm still trying to find some strength indicators on the U.S. dollar, and there's just not a lot out there. I see a government that actually wants to weaken the U.S. dollar to keep themselves more competitive, and in that case, that's going to bode well for gold. And so I don't think we're stopping at 3,300, but the growth definitely helps on that front. And so the combination of climbing to 1 million gold equivalent ounces with whatever the price of gold is going to be 4 or 5 years from now, pretty exciting.
Yeah.
Of course, it gives us a lot of capacity to continue growing our portfolio, and when we're always out there looking for the right accretive deal, properly structured and properly priced.
You looking at a lot right now? Or how many are you looking
Yeah.
at?
Yeah. I mean, we typically always have at least 10 or 12 projects underway,
Right.
under various stages of review. there's some pretty attractive projects out there that we're diving deep into right now. There's definitely a healthy appetite, as I mentioned earlier on. The one-stop shop type financing has really attracted a lot of attention. The Montage Gold type deal that we did on the Kone project, it's a unique structure that gives incredible flexibility to them as a constructor and as a builder and as an operator, and yet gives us good exposure to commodity prices and to growth at that project. And so we a classic win-win situation, which is the only way that Wheaton does transactions.
Yeah, well said. Hey, Lisa, we talked about M&A before, but Royal Gold announced that $3.5 billion all-stock takeover of Sandstorm. I mean, you've long argued kind of that roll-ups don't create real synergies in streaming. Does this prove your discipline was right, or does the scale shift the competitive landscape here?
I would just point to the share price performance of the companies to answer that question. I don't think anything else has to be said. It hasn't been a smooth acquisition from that sense. I mean, it hasn't closed yet, obviously, but the market did not respond well to that. It's when we're making acquisitions at one or around 1 times net asset value, buying a pure streaming company, albeit smaller or albeit whatever size and maybe slightly lower multiples. I've long taken the perspective that the multiples that we trade at are a reward for how we've done, how focused we are in terms of making good acquisitions that deliver value to all parties, to all stakeholders. And the moment we start justifying or using that multiple to justify acquisitions, which is what I would argue has happened there, that's when you start losing shareholders' confidence, and so it's if anything, it's reinforced my negativity towards the M&A space within streaming. And there's always unique opportunities. We have acquired in the past other streaming competitors, but it was because it was priced appropriately versus the value of the assets within, and so we'll continue to watch that space, but it's not something that we find attractive.
Yeah, so Wheaton's not, at risk of being outbid for the next generation of deals here.
I learned a long time ago, if you're winning all the bids, you're probably paying too much, right? So it's a healthy market is a good market. And I think as long as we're selective and get the ones that we're really interested in, really excited about, it's paid off for us to date. And so I don't see any reason to change that.
Yeah, Randy, you've been blunt about the permitting delays, often 10 to 15 years. Are the number one bottleneck here? I mean, since we last spoke, and I know it's only been a few months, but you just talked about people all of a sudden starting to realize or be open to mining. Have you seen any serious reforms in North America or Canada or the U.S. still falling behind this resource race?
Well, positive noise, again, just noise so far out of the White House just yesterday, right? I believe Mike Henry from BHP was in the White House along with a few other executives in the copper space talking about that. And Trump made comments about how frustrating it is to, particularly in the state of Arizona, to try and build copper assets. I believe the license plate says the copper state. And yet the number of we're partners with Hudbay on the Copper World project, which was originally called the Rosemont project when they applied for their first permit over 20 years ago. It's a simple, clean project, no different than the other copper mines that have delivered so much value and wealth to Arizona historically, and yet and so I was quite happy to see the rhetoric or the noise coming out of the White House yesterday, and Trump actually commenting on how embarrassing those delays are, especially when you compare yourself around the world. So hopefully there is some changes. Hopefully we see some stuff moving forward. We did see a negative court decision a couple of days ago down on in Arizona. Again, further delaying moving forward on some of the land swaps on resolution. So it's just it's frustrating, and especially if you're a smaller company, a single asset development company. How do you afford this? How do you keep the doors open? In terms of funding this while you have no cash flow coming from the asset going forward, and it just really narrows out the space. I think some of this tariff talk has caused jurisdictions to actually think about what they actually produce for themselves, and I do think there is a benefit to society out of that.
Yeah, I mean, the current Prime Minister of Canada, Carney, I mean, I think he ran on this whole, we're going to bring business to Canada. I mean, Canada has lost four Tier 1 discoveries since 2020. I mean, is Canada open for business?
Again, rhetoric.
Yeah,
Let's see the
yeah.
let's see some actual product, right? We hear the right things, but at the same time, we're still there's plenty of projects still waiting for permits, still waiting to move forward in Canada. We haven't seen anything concrete delivered on that front yet. We see motions and suggestions about new agencies, new federal government agencies that will accelerate the process and etc. But I would love to see something concrete.
Yeah, it all sounds like bureaucracy. Earlier this year, you told me silver had that path to $40. I mean, it almost got close. We're now, what, 37? ETF inflows are starting to pick up on the silver side. You stand by the call? I mean, what are your thoughts on the silver?
Oh yeah, no, it's again, silver. As we pick up more retail interest in precious metals, which I do feel like the market has shifted that way, silver will catch more of a ride with that. Silver always has had a bit broader exposure to the retail space than gold has, and so it should outperform as we see that retail interest pick up.
We've talked about this to leave it, but for many of our viewers own physical gold, as you know, or ETFs, but some are looking at miners and streamers for the first time. From your perspective, I mean, why should an investor own a streaming company like Wheaton instead of a mining stock or just the bullion?
I would call that a softball, Jeremy.
That is a pretty
I'm
softball,
gonna,
buddy.
I'm going to try and hit a home run with it. Thank you.
But it's open, you know.
No, it is. Thank
Yeah,
you. Look, it comes down to risk, and especially if you're a generalist, right? The,
yeah.
the, the biggest challenge is cost delivery, is the margins that actually come from building and operating a mine. It's always been the biggest risk in any mining investment, and you can do very well if you pick the right companies, but that takes a certain measure of, I would say, skill and luck, combination of skill and luck. That's what a streaming company delivers to its investors is a dramatic reduction in the risk side of that. Our costs are defined. You know what the costs are. The
Yeah.
capital costs are defined by what we pay for the upfront payment. The operating costs are defined in the contract, and so there's no surprises on the cost side. You understand that, and so you get true, authentic, levered exposure to the commodity without cost risk. And then the growth, we get access to that. We get the expansion potential, everything. We get it's a great way to step into the space. It's a great way to, as I say, dip your toe into the mining space. And I really do think that we form that perfect hybrid between just buying bullion, which has zero growth and, to be honest, costs you fees. You can buy ETFs along the same lines. A streaming company gives you that levered exposure, even more so than a royalty company. A streaming company gives you levered exposure to the commodity price, which is similar to the operators, but the cost risk is dramatically increased, and that's the real I'd say kicker in terms of why Wheaton is an attractive way to. I've always said Wheaton should be the foundation of your precious metals investment. But it's definitely worth stepping into the operators. There are some great opportunities in that space. But a company like ours, with its low risk profile, it should be the foundation of everyone's precious metals investment.
Yeah, I mean that was the easy one, but I mean when we talk about these, right, there is a valuation premium. Streamers often trade at higher multiples, 20, 25 times cash flow compared to the miners. Do you think investors might be overpaying for safety? And if there's a concentration risk, I'm just looking at those, even diversified, there's a few core assets usually dominating the cash flow base, right?
Yeah, I mean, and I would say you'd have to have a look at those assets.
Yeah.
Our core flagship asset is Salobo, owned by Vale in Brazil. Vale is a quasi, I mean, it's a very strong Brazilian institution, and so very, very well supported and embraced within Brazil. And then the asset itself is a tier one, first quartile producer that's got all sorts of exploration potential. It's really been delivering on its production commitments of all time. So if I was going to have a flagship asset, I think Salobo is the perfect flagship asset to build a company around. I'm very comfortable with that. The other side, the premiums that we trade at, again, I think it comes down to risk profile. What kind of risk
Yeah.
do you want to take? And that's the key difference. Our risk profiles are slightly higher than most mining companies, and a lot higher than our trading multiples are slightly higher than some mining companies, and a lot higher than most. And it really comes down to the confidence about what we'll be able to deliver back to our shareholders. And so that combination of commodity exposure, resource exploration, expansion potential, levered exposure to the commodity price itself, I really do think it comes into play. And so, we only look expensive when you look at us like a mining company. We're not a mining company, right? Our risk profile is so much lower than that, and that's where it starts getting attractive.
If we're sitting here at the end of Q4 chatting again, I mean, what's more likely? Last question, gold at above 3,800, silver above 40, or Wheaton shares at new highs?
Well, I'm confident Wheaton shares will be at new highs just because of organic growth. Even if prices stay constant, we will see that continued as we continue to deliver on the growth profile. And, we've got a couple more exciting projects coming on with Mineral Park and Platte Reef coming on before the end of the year. So the Q4 call, I'm confident on the continued high prices for Wheaton. It wouldn't surprise me to see silver have at least touched 40, whether it's holding it at that point or not. But I do think that we are seeing that increased retail pickup, and it'll be interesting to see. There's no doubt that the Fed decisions in terms of rate cuts and that will have an impact on the next step in the precious metal space. And so I look forward to seeing what happens over the course of the year. There's again a lot of political pressure on that U.S. dollar. So let's see how that plays out. It should play out well for gold and silver.
Interesting. And the Fed. Okay, well, we're watching right here. Randy Smallwood, CEO of Wheaton Precious Metals, joining us. Always a pleasure to have you. Thanks for making the time, Randy. Enjoy your summer.
Appreciate that. Thank you, Jeremy. You too.
Thanks, mate. All right, that's it for us here on Kitco News. Thanks for watching. Hit that subscribe button, and we'll see you next time.